So this was about all e-technology. Let us look at the company number 2 in the pharma space, which is Marksan Pharma. Now, again, Marksan Pharma, it's not a new company for me. I have been talking about this company for more than a year, tracking since it was at 60 rupees. And the kind of target and aspirations management had set 2, 3 years back, it has delivered. So Marksan Pharma is a name in the OTC product market. They are mainly present in pain management, cough and cold, those kind of healthcare necessities. A good share of revenue comes from OTC market. And 3 years back, Marksan set up a target to achieve a top line growth rate of 2000 crore with certain margins and certain profit numbers. And company has exceeded those numbers. Now all that is past. Now Marksan management has aspired to grow from 2000 crore to 3000 crore revenue in next 2 to 3 years, which again, if you look in terms of sales CAGR, that number will be more than 20%. Now, whether Marksan will achieve that number or not, this is yet to be seen. But as I said, we have to look at the historical track record of the management, whether the management has lived up to those words, and then we need to continuously track these companies. Further, again, if we look and evaluate companies on similar quality in terms of balance sheet strength, in terms of cash on books, in terms of cash flow generation capability, EBITDA to cash flow, management execution, whatever traits I discussed in all e-tech, maybe more, little less, but similar kind of traits are also available in Marksan Pharma. And the stock is available around 23-24p. So let me remind you, this is a market where getting things highly cheap at highly cheap valuation is very difficult. It's very difficult to find companies growing at a high rate available at 10-12 kind of P. Maybe 1.5 years back we could have got those valuations, but in this market it's very difficult. But still, if the company can deliver more than 20% growth rate, then a 23-24 PE could be sustainable. Now, how this growth will come in Marksan Pharma? So Marksan has acquired a manufacturing facility from Teva, and this facility is going to go live. And whenever in pharma manufacturing facility go live, you have to do a lot of spending before it, right from building that facility, taking loan, your interest might go up, your depreciation might go up, you have to hire your employees. So there is a lot of front loading of expense on the P&L, not only the capex on the balance sheet. And as the capacity utilization of the business grows, you get a lift in your sales, you get a lift in your margins. So broadly looks to me that is what going to be the story of Marksan Pharma when you look at the con call transcripts in terms of growth aspiration and how it will come. And this is one of the candidates again in 20% growth rate with all the ingredients there, in my view, available at a fair valuation. Now let us look at the third company. The third company is a affordable housing finance company named Aavas Financiers, and this company was very popular 3-4 years back. But what had happened that the company used to trade on a book value of 6-7, and that time the company used to grow at I think 35% plus, and market always adjusts valuation, and when the growth falls, the valuation also readjusts. So the growth has fallen from 35%, but still it's a decent 20% kind of growth story when we look at the numbers. And when you look at 5-year sales CAGR, 5-year PAT CAGR, 3-year sales CAGR, 3-year PAT CAGR, you will realize that the company is still growing at 20, 22, 23% kind of number. Now, what interesting the company has done, right now, the company is somewhere in the mid-level affordable housing finance company, and they want to keep growing their AUM. So the company has gone for a complete technological transformation by investing in technology. And it is the technology which management says is going to scale the business for them. Now, this has been a business in transition. Also, in between, it led to exit of the previous CEO who had built the business in last 10 years. So all of that, the reduction in the growth from 35%, the overvaluation, the technology transformation, the exit of previous CEO, all of this led to price correction. But what has happened again, if you look at the Jan to March Q4 quarter con call, the disbursement growth rate has come back, the AUM growth rate has come back, and the company is again guiding for more than 20% growth rate in AUM. Also, because of these technology transformations, the company is also guiding for a operational improvement in how they manage their operations and expenses, and they're expecting the operation to asset ratio to improve from 3.5% to 3.1%. Now, the management has said all of this somewhere in Q2 and Q3 con calls, and in Q4, the first reflection of growth numbers coming back has been evident. And now it is to be seen if the management can deliver and execute on the 20% growth path. And this company is available almost to its lifetime, lifetime least book value, which is somewhere around. So this company, few months back, it was available around 3 book value, which has been the historically lowest book value in the stock's time frame. However, the stock was totally out of momentum, creating lower highs and lower lows. But 2-3 months back, it has broken this downtrend and it has changed its direction and looks like the first signs of uptrend is visible. So when we look at chart, what is interesting is when we look at the chart, you can see the symbol G. G is nothing but G is for Ghumega. At Scientific Investing, we have interesting Simba and Trading View indicators, which is our system. And Ghumega is our indicator to identify if a stock is entering into stage 2. And looks like the stock has just entered into a stage 2, which is a good way to ride a stock if the thesis works, because it helps you to stay away from the stock for the whole downtrend. It helps you to stay away when the stock is consolidating, and it helps you to make an entry at the right time, or at least to study the stock at the right time. So again, these are only ideation tools. Beyond ideation, one needs to do their homework and build conviction. And all of us need to do that exercise for ourselves. Now, one thing you will notice, I discussed about the common traits of growth stocks, what else the stock should have. And I highlighted in Olitech, I highlighted in Marksan. I'm not talking about that in Aavas, because Aavas is a finance business, it's a leverage business. And when we analyze a leverage business, the criteria is little different, because a leverage business will always have a debt, its debt equity will always be high. So whenever it comes to a finance business, they are evaluated more on their ability to grow without diluting the balance sheet, without diluting the NPAs, without doing a lot of provisioning, without doing a lot of write-offs. So this industry is very, very different. And if you want to understand how to analyze finance business, on our YouTube channel, we had made two videos, one on Karur Vyas Bank, KVB Bank, when the stock was around 50 rupees 1.5 years back, and CUB Bank around 125, 130 rupees. So those two videos, though they are 1-year-old video, it will help you to understand how to analyze a leverage company or a lending company in detail. And we see the same kind of traits in Aavas. If you look at the kind of NPAs Aavas had in its history, the kind of provisioning they have done in the history, the kind of losses they have declared in the history, the way they have managed the books, the granularity of the books, it's very, very impressive. So these were 3 different growth companies where management had shown the execution track record in the past. They are very good in terms of the business quality, which defines a good stock. The management has the capability to do good things. They are showing aspirations to go do good things. Each of the management has given an aspiration to grow at more than 20%. And these stocks are also available somewhere between 20 to 28 P kind of a number. If you ask me which I like most out of these 3, I think the answer would depend on what do we want to pick. If we are looking for a very, very tiny, small company which has a huge market opportunity to grow and long time to grow, maybe Olitech could be a fit. If we are looking for a company in the financial space, but if we are looking for a company where there is already some reasonable size, because we don't want to get into too smaller company, then a Marksan or a Aavas could be looked at. But the most important point is, it is not about these 3 companies. The most important point is the framework. We have to find good high growth companies with very good past record, very good balance sheet, very good cash flow, very good management, which is available at a fair valuation. And whenever we will take 8 or 10 bets, some bets will go right, some bets will go wrong, some managements may not perform. But at a portfolio and at a basket level, this kind of strategy works and delivers good return. So I hope this video was useful to you in terms of how to identify good ideas, the importance of high growth ideas, what to look for in ideas apart from high growth, and how to differentiate businesses between a service business and software product solution business. So if you know any such good high growth company with a strong balance sheet, with a strong cash flow, with a management with good execution history and available today at a fair valuation in the given market condition, do highlight the name of the company in the comment box along with some additional information, and we will try to cover some of those companies in more detail. I will see you in the next video. Thank you.